just, help us with perspective in terms of significance and size, as Hormaz was also telling us that the JP Morgan one was the big one, right? $30 to $40 billion perhaps expected inflows. How significant was the FTSE inclusion? And, will there be any disappointment on the street today?
I think yesterday's borrowing program, that's have been quite positive. In fact, people will completely ignore because nobody was really expecting on FTSE. It is just a bonus as and when it comes, right? So from that perspective, as of right now, there is no disappointment because of this 6 month exclusion, 6 month extension or other stuff. But from that, I think today's the bond market reaction would be actually 3 to 4 basis point lower. For all if people were not waiting for the data, U.S. data tomorrow, we might actually have gone below 7 today itself, right? One time, touching 7%. But I won't be surprised even if it goes today to almost like 701, 7% today. That can really happen because lower borrowing program in first half, normally you have 57 to 60% in the first half. It's like 53%. Even the 5 and 3 years are also monthly options. So there's a good, calendar which they declared yesterday. So it's a very, so completely on the FTSE, nobody's going to really look at it. And to be honest, whether they take the inclusion now, in fact, that would have been more painful. Let that get deferred because we don't want so much of flow coming in India at one point of time, right? So that would be actually good for the country.
So, Mr. Mehta, just to put the context of the borrowing program, so yesterday the government said that they will be borrowing 7.5 lakh crore in the first half of the year. What was the expectation that the market had?
See, normally, if you look at by history, it's normally the first half is, more than the second half. So normally it has been around 57 to 60%. And this time round, of course, because of election, the spending may not be planned. Some of the capex the government might be doing may get deferred. And that's why, government actually made a statement saying that we want to make sure the cash flows are, not stuck with with government, because if you keep on borrowing and if you're not able to spend because of election, then it necessarily creates strain on the liquidity in the system, right? And of course, with the first half borrowing being lower, who knows, on the second half, we will also have the inclusion guys start buying from 1st June onwards. So to that extent, it's a very, very positive news for the bond market. So its borrowing number for the first half has been very well, irrespective of FTSE, that would have been great situation today.
Absolutely. I mean, yeah, that's the bigger domestic cue for sure. Perhaps FTSE not so much in the limelight. You mentioned that we could head towards a 7% mark. Just tie this in with the overall liquidity picture as well, Mr. Mehta, considering that we're moving closer to policy time as well now.
Yeah, so policy, I think the entire market expectation, there's, of course, nobody is talking about rate hike for next 6 months, 1 year, unless, some media is now talking about oil crude going to 100 in September or so. That anyway, we'll come to know only that. But as of right now, looking at the world today, we are not expecting, nobody is expecting any rate hike, right? The only next move which people are expecting is a rate cut. And even policy rate cut change may take 6 months, whenever it happens. But even without the policy rate being moved away, even at the 6.5 policy rate, with the current demand, with the supply being lower, current demand, plus, of course, the JP Morgan bond inclusion demand, people are looking at 6.75 to 6.8 in next 3 to 6 months. 3 to 4 months.
That's without a rate cut, right? That's going to be quite phenomenal.
Without the rate cut.
That's without the rate cut, yeah.
So demand supply.
Absolutely. So I guess Indian bonds really on a roll. Just to complete the picture, just for our perspective, how significant is inclusion in the FTSE indices, just from a global standpoint? And whenever it happens, if it happens, I mean, should we be so bothered now that the JP Morgan inclusion is already done, the Bloomberg one is done?
Yeah, so if you really look at actual inclusion number is for JP Morgan is also $23 billion. But what happens in good times, non-index follower, non-index trackers will also feel more comfortable to invest in because they can, if there's something goes wrong, they can justify to their bosses, yeah, it was part of the index, right? So from that perspective, in good times, if $23 billion, it can really get stretched to $35 billion, right? So from that perspective, that itself is a good demand for us. FTSE, as and when it comes, of course, it's a more global, larger index. As and when it comes, that could add up another 15 or so. But I think we are good, if it is good time and looks like India is in good role for next 5 years or so. So I think we will see more than the weightage inclusion coming, funds flows coming in more than the actual weightage here in India.